Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Wednesday, the 17th of October, 2018. We're about 2:15 p.m. Central Daylight Time. The grain markets, they finished with wheat down 6, the corn down 1, and the bean market down a penny. Remember, we have the cattle on feed report coming out on Friday as well. That will impact that sector. We're also seeing energy markets down in the stock market at this moment down. It's been so wild. If you turn your head on the stock market, it's up or down on you by the time you walk outside and come right back in. So it's a pretty volatile day. When we look at the soybeans, we can see that for the week we're up 18 cents. I'm going to stick with what I've said until I have reason not to. I think this 8.10.5, 8 and 11.5, this double area here was the harvest low. I realize harvest pressure can come back on the market at any time, but until that is taken out, I have every reason to think that the lows of this market look like they're in. And I say that because on the weekly chart, you are over the 18-week moving average of closes, and the pattern has become a pattern of higher weekly highs and higher weekly lows. When you take a look at the daily chart, you've got a chart that's suddenly narrowing in. You can almost draw a pennant here. Do you see that? If you were to draw it, that's the type of action this market is doing right now. The pattern is one of higher lows and higher highs, but it can change very quickly should the market take out the lows of yesterday, which were 879.25. That would then give you the pattern, if you don't move back up first, of lower highs and lower lows. Until that's taken out, the trend is up, and the number the bulls have to defend, in my opinion, is not letting that number be taken out. The battleground is crystal clear. It's the 100-day average of closes down to the 18-day, and when you add in the Bollinger Bands, you get the double whammy of 2 resistance points there. So this is the resistance area. Obviously, if it can pop up and over that, you'll start hearing more and more bullish talk in the market. But for the time being, I think a lot of people have backed out of the market up here, the bulls, and they're waiting to see what next in the market. In terms of momentum, the momentum is up. If you can look at this, you see both numbers that make up the slow stochastic today are over 80. Yesterday, they were not. Therefore, you're just in an overbought market that has hit the 100-day, the upper Bollinger Band. In other words, while the trend is up, the market has hit its targets. In the meal market, the target was the upper Bollinger Band, and it has stalled. Now, the market hasn't been able to add the momentum to get up to its 100-day average, and it too is in an overbought area. And soybean oil, well, if you watch the soybean oil, take a look at these Bollinger Bands. Remember what these black dashed lines are. They're an algorithm designed to keep the market trading within them 95% of the time. And therefore, how I look at them is they offer a resistance point, they offer a support point, but in this chart, more important is you're getting a bullish crossover today. The 18-day average of closes got over the 100. If we come back, you can see it wasn't that way yesterday. It got that way today. So now what we have is a market that is, as I call it, it's got a new bullish signal, and we'll see if the market can build on that in any way. The momentum here, though, is against it temporarily because it is overbought. You've got readings over 70. Any reading over 70 is overbought the way that I teach charting. You can be over 70 and get a reading like this, where both numbers get over 80, another level, start going sideways. What that is that's called an embedded slow stochastic trade. And as an embedded trade, what I look at is to see, does the market keep the red line, it's called the K line on the stochastic, over 80. If it doesn't, odds will favor price and the 18-day average make a run at each other. Where the market is battling right now is the 100-day average up to the upper Bollinger Band. Again, that 95% of the time you'll trade within these bands, that 2 area. If it lets loose, I would then start looking for the market to retrace back towards that 18-day average for better support. In the wheat markets, it's a sideways market. Now, I was looking at the seasonals, what happens down the road, and they often turn into a sell signal in this market. We don't have that yet. What we have is no trend with a lower low, a higher high, caught in all the sideways action, and we haven't gotten up to hitting or on the bottom or the top, the Bollinger Band. The last time we hit one was here. So the market's just winding up, trying to get itself set for something, and I don't know what that something is. Sometimes you think you don't know anyways. But momentum is sort of waffling and trying to turn down. The bias is up because you're over the 18-day average, but you're not trending in terms of making either higher highs, higher lows, or lower highs, lower lows. In the sugar market, this has been a heck of a bull market. It has moved on up from here, let's call it the 1050 level, all the way up here now to a high of 1376. In round figures, you got a near 30% gain. I'm not saying it can't go higher. I'm saying it's getting long in the tooth temporarily. Coffee's doing the same thing. So the soft commodities, you'll see cocoa too, they have taken off to the upside for whatever reason. As a group, they took off. They are still moving that way. Yes, they're getting overbought, but they are strong. The market that is not a soft, I don't call this a soft commodity, is cotton. It's a fiber. It's pulling back towards that 18-day average of closes. If you look at the slow stochastic study, the market's just getting away from being overbought. So maybe it goes there and tries to figure out what the next move is, but it looks to me like that spurt to the upside is running out of some steam at this point. In the cattle market, how do you play the cattle on feed will be your question. The resistance has shown itself at the 18-day average, but the way the chart setup is should you pop over 118.15 and stay over that 18-day average, you would get a pattern of higher lows, higher highs, according to the swing line theory. In the feeder cattle, you have a bear market. You have a pattern of lower highs, lower lows that is riding the lower Bollinger Band. And what riding means is you'll get under it, maybe a day or two, then you pop back to the other side, but you don't seem to leave it. And that's often a sign that a trend, a mini trend or a longer trend, has locked in on you, so you start looking at momentum. It is getting oversold, as I'd suspect, in front of the cattle on feed report. In the hog market, we keep hearing counter-afflicting news, if you will, from China. In one province, they open it, everything's good, they don't have the problems anymore. Then you get another story like today, where they found more hogs in a different province, and now they have to be culled. All in all, I think it's something like 50,000 hogs that they've put down because of the African swine flu. We'll see if they get control of the disease or not. Supporting the hogs back at the combination of the 100-day average and the lower Bollinger Band. The market is not trending. It got to a higher high, lower low pattern, and we are entering now oversold territory with a reading just under 30 in the slow stochastic. You can see the stock market still staying down as I'm leaving this point right now. Let's talk about one of the ways that I keep up, and I can help you keep up with the market. This is for the grain boys. We've put together this is actually my phone with my grain look to it, as I like to call it. You can look at all the charts you want. You can look at, be it soybeans, corn, wheat, crush spreads, they're all here. You can place orders through this, and we have a lot of clients that now do. You can get alerts from it. Prices hit, you want to know about it. You can now say voice control with things like show me the weather, and a map of the weather for grains or for different products is going to show up. You can get that far. Text to voice. Listen to this.
September is up 2.25 and last traded at 2000.
So what happens there? Well, you're driving in your tractor, your cars, whatever it might be. You can just say, play my quotes. It'll loop through it. Then, what about my videos? When they come up, the phone will send you a message as a notification, not a text now. Just hit it, the video will play. You get all this. You can stay up to date with our news stories, a lot of them written just for the ag market, obviously. How do you get it? Give us a call. You can go to our website and sign up. It is a download. You can go to your Android store, your Apple store. You'll be able to download it, the QT Market Center. You can come right here if you want. You can get to it. You're going to need a user ID and password. We will send you that when you ask to try this out. No credit card, nothing like that. Let me put it in your hand. You're going to get hooked on it. I'm Ira Epstein. You have a good day.